Good afternoon, ladies and gentlemen, and welcome to the Glantus Holdings full year results investor presentation. Apologies for the slight delay in the starting of today's presentation. Throughout today's meeting, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we would like to submit the following poll, and if you'll give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand over to CEO Maurice Healy. Good afternoon, sir.
Hi, thank you, Mark. Good afternoon, everybody. Sorry for the delay. I have to put my hand up to this one. For some reason, my Wi-Fi, which was working perfectly well all day, just as we were doing this, it cut out. So I'm actually dialing in myself now. So again, apologies for the delay. I'm joined today by our CFO, Gráinne McKeown. We're going to do a quick run through of the company. I'll talk a little bit about the organization. Many of you will be familiar with our company, but those of you who are hearing about us for the first time, I'll give a whistle-stop tour, and then Gráinne will go into the results of 2021, and then we'll do a quick wrap-up by talking about the year ahead. So the first slide there, slide number 2 there, just a quote from the year that we've just had. 2021 was our year of IPO, and we hit all the targets that we set out at the time of the IPO, including doing a couple of acquisitions also. But we'll go into that in a bit more detail. Who we are, number 3 there, is, for those not familiar, we are a technology company. We have built SaaS solutions that focus entirely on the accounts payable function of large organizations. We sit above their systems. We extract data from their systems, the accounts payable functions, and we feed it back and give them a deep analysis, automation, digitizing it, and also recover a lot of lost working capital for them. In dealing with us, it's easy to deal with us as an organization because we sit above the systems. They don't have to change systems. They don't have to retrain their staff. And they don't have to use up valuable internal resources. So it's a nice solution, and they have an instant return on investment, which largely accounts for the traction we're getting with these large organizations. We were founded, next slide there, is in 2014. We took the product rollout in 2017. We've done acquisitions over the last number of years. We IPO'd on AIM in 2012. The company is still management owned up to 50%, including friends that are a part of it on the road with us. It's about 65%. So we control about 65% of the shareholding. The reason, next slide there, the reason people work with us is these large organizations, no matter how good their systems are, whether they use a big enterprise system across their entire group, or as in most cases, because a lot of our customers have grown by acquisition, they've got many different ERP systems. Either way, they end up with multiple regions, multiple divisions, multiple ERP systems, and the data tends to be siloed. And from an AP perspective, they can't get that one view of all of their supplier ecosystems. And a lot of things happen with payments being paid, the same payment being paid from different divisions, credit notes not processed properly. And then there's also, it's open to potentially fraudulent activity. There are compliance issues. And our suite of products deals with all of those. We deliver the products through the DataShark suite with Discover, Delve, Flow, and Origin. But without going too much into each one of them, they all have 5 things in common. First of all, they have a set of analytics, a basic set, and they can pay extra for more. They've got fraud detection, or at least fraud indicators. We will talk about We have 10 points of fraudulent activity, and our customers, we have two qualifying questions. They have to be spending more than $500 million, and suppliers of numbering 4,000 and beyond. So by using us with that fraud detection, they go out of 20,000 suppliers, we would say 17 are hitting 7 of our targets. You need to look at them. That's how we do the fraud detection. We give them indicators. So we've got the analytics, the fraud detection, compliance, anomaly detection, which is a lot of things around the supplier ecosystem and having more than one supplier in different areas and not knowing about it. And then we have, of course, the recovery part, which generates working capital and actually pays for the whole lot for them. This next slide talks about the ISO, and a lot of people kind of will think about ISO and find it a bit boring, but for us, it's an essential part of what we do. These large organizations are more and more, hyper about data privacy, data protection. We see a lot of stories in the newspapers at the moment. So now, when we're setting up a new company, or even when we're dealing with existing customers, we get a 35-page document asking a lot of questions around this area, and we have an excellent compliance department, and we can turn around those things very quickly. That's us in a nutshell, and I'll talk a bit more, but I'll hand over to Gronya now for the review of 2021.
Thank you, Maurice. And thank you everybody for attending. So just some slides to back up the results that we released yesterday. Some highlights, as Maurice has said, very successful IPO in May. We currently have 1.6 trillion of transactions on our platform, which is a phenomenal number, and it gives an idea into the scale and depth of customer spend that Glantus is overseeing each year. Our revenue growth was up over 27% to 10.7 million, and our adjusted EBITDA margin increased to 3.1 million, which is 29%. So again, a very good year-on-year increase, not just in numerical, but also in percentage. Another good key indicator for us is our subscription churn rate decreased significantly down to 2.9%, and that's a very good measure of how sticky the client base is with Glantus, and the average life of the clients are now over 7 years. So a very good key indicator that we keep an eye on. Global customers rising year on year, which again, another good indicator. And as Maurice said, we've re-accredited with our ISO 27701 being the most important for us from a data protection, data privacy perspective. And for the acquisitions we took on board last year, we are re-accredited with ISO with them now as they form part of the group. And then finally, the two strategic and earnings enhancing acquisitions in the UK and the US being TIC and Meridian. This next slide then just gives all the key indicators on a chart. You can see they're up in all areas. So very, very proud of our results and the hard work and effort put in by the whole team. And then into the profit and loss. Revenue growth, as you can see there, the trading and other income to 10.7, adjusted gross profit going up to 8.5. Some other items just to call out there on the trading statement: exceptional costs of 2.9. Obviously, with an IPO and 2 acquisitions, we had exceptional costs. There's 1 million of acquisition costs on that line item, which would be predominantly for TIC, being the bigger acquisition in the year. And then we also had a payment on IPO to Beachpoint. Some of you may remember that was a part of our debt terms with Beachpoint that happened at IPO, as well as IPO costs of 900,000. Another point of note is our income tax. As you'll see, there is very, very low. We worked very hard in the year to make sure that we were very tax efficient and that our tax structure is set up to really benefit Glantus. So an effective tax rate of less than 1%. Obviously, our IP is based in Ireland, and we also got some R&D tax credits as well, helping that. And that we would expect to continue into the future years. On our balance sheet, some points of note there would be our intangible assets increasing, which clearly is reflective of our acquisitions of Technology, Insight and Meridian, and we did 1.2 million investment in our R&D. Our share premium went up as a direct result of our IPO, and there was some shares issued as part of the consideration deal structure for the 2 acquisitions. And then finally, the other point of note is our long-term liabilities increased as a result of some additional debt we took on board to part fund the Technology Insight acquisition. Moving on then to the cash flow. On the cash flow side of things, again, some points of note: the cash flows from investing activities, the 6.8 million there for the acquisitions is broken down between Technology Insights of 5.5 million and 1.3 from Meridian. And then the loans received, as I just referred to in my previous slide there, net 4.5 million, which was 5 million coming in from Beach Point for the TIC loan, and then there was some capital repayments going out. We do intend to refinance in 2022. We're in the middle of that process right now. We have stated that that is an aim of ourselves to do that. We had said that at IPO, and we strategically prioritise getting the TIC deal over the line first. But we're actively involved in refinancing right now. And then you can see the exceptional cost of 2.9, which is carried over from the P&L. And then finally, the other point of note is deferred consideration. We paid out 2.4 million in deferred consideration in 2021, 2 million of which was for the JPD acquisition, which we did in 2020. And that completes the full purchase price of JPD off the balance sheet now at this stage. And that concludes any financial questions. Happy to take questions at the end if there's any questions that anybody has. Back to you, Maurice.
Thanks, Grania. I'm finally settling down after that Wi-Fi disaster, but Vodafone have just let me know that it's a fault in the general area, so it's not completely down to me. For the remainder of this presentation, I want to talk a little bit about our growth strategy and how we expect things to move during the remainder of this year. Just a couple of things. First of all, we have some new people who've come on since the end of the year. Diane Gray Smith was a non-executive, came on at the time of the IPO. We brought her on for her tech and particularly FinTech knowledge. She's worked 30 years at C-level in that space. And then a couple of months ago, she moved from non-exec to executive, and she's heading up that division, and I'll talk a little bit more about that later on. David Rosenthal has joined as Chief Operating Officer, 30 years experience working with large financial institutions, generally in the rollout of major products, technology products, or projects across these organizations. Brings a wealth of experience, has been in now for about 3 months, and we're delighted to have him on board. Takes a bit of pressure off me. I was kind of doing the CEO and COO role, but as the company is growing and getting bigger, it's important that we bring in quality people to share the load as we go on. So it was great to be able to attract both Diane and David onto the executive team. Just moving on, our client base and where we're positioned within the organization, we would have been in the bottom left-hand corner of that chart. It's a sleepy kind of area. It's recovery only, and a lot of it is manual work. Our technology and the development and the work we put in since the IPO into the technology and into our products has moved us right up through the grid. We're seen as innovators. And particularly, we did a rebrand during the period as well, and that brand is now much more recognizable in the States. As we've moved through it, we've had organizations come on to us. KPMG in Texas rang us up to see how we could work with their clients, because we're now up and being compared to the likes of a Coupa or a Basware, and we're similar but not the same. So if you take the likes of Coupa, who do purchase to procurement, which we do ourselves, and they kind of go into spend, but we go in a different direction into that supplier market and ecosystem and into recovery and fraud. And similarly with Basware, another large organization, they would only do the purchase to payment. We do a lot more. So we talk to customers, and if they've got some of our competitors, we often say, look, we'll happily sit alongside them because our offering is different, and you can just take whatever elements of our business that you want to take. So that's been very successful, and we can see it in the pipelines at the moment, in how the pipelines are growing and how we're getting more inbound queries because that brand positioning is working. We have a lot of recognizable brands, global brands. In the next slide there, you can see those. But what always amazes me is that as our pipeline in the US in particular grows, there's a lot of names I've never heard of, and yet they are enormous organizations. And we've got testimonials and people who are willing to come on and talk for us. The three areas of growth we've got, the first one is the organic growth. And again, with the way, you know, a lot of things have changed since the IPO in terms of how the product has developed and advanced, and it's now offered almost modularly. They can take duplicate payments, they can take open credits, they can take statement reconciliation, fraud, analytics, advanced analytics with artificial intelligence and robotics built into the whole thing, all in a SaaS model, and we charge them for these modules, and our pricing is based on either a subscription or a revenue share with them, just at the recovery level, but they pay subscription for all the rest. So the subscription is growing, but it's all our customers are contracted 3 to 5 years and then rolling thereafter, and the average length of a customer is 6 or 7 years. So it's all really sticky business. And now we have an account management team. We're selling more into the existing customer base, and that's been good in the first quarter. And then new customers, as I said, the brand has gotten bigger. We do a lot on AP specific events. We stand out against the competition there because of the technology, maybe a bit because the brand is quite bright and garish as well, but mainly because we've got these big screens which is showing the dashboard, showing the workflows, showing what an assessment report does and the areas that it gives our customers. So again, we get a lot from these events, and we monitor the customers all the time. We're always measuring customer experience. We're watching the branding with people like G2 doing a brand push at the moment. So all of that in the organic side is going really well. And in my career, I've not seen the excitement around customers and the pipeline that we have at the moment. So we're really pleased with that. Partners, I'm sure some of you heard me say this before, we didn't get it right from the very beginning. We had a lot of people who were willing to talk to us, but actually getting the right type of partner who will invest in the sales that's required to resell our products. It took a bit of time, and we now have very strict criteria around the partnerships, and it's got to be an integral part of their strategy before we'll sign them up. We've recently now, it's also a useful way for geographic growth. So we signed a Canadian partner since Christmas and a South African partner. We are expecting revenues from those later on in the year. And then we've got some exciting things happening on the partner side as well, some bigger areas that we're working through. So we're expecting good news flow from that as the year goes on as well. Acquisitions, that next slide is, it's in our DNA doing acquisitions. We always have a pipeline of acquisitions. It's not a secret. I've said it a lot over the last number of months. We have to be careful because of where the share price is and our market cap. Our whole thing around acquisitions is the criteria involves them being in the space we're in, working with AP companies, having good customer base, recurring revenue, sometimes a technology or a know-how that we're interested in. But always when we do these acquisitions, we get both cost synergies and revenue synergies, because most of them don't have very good technology, so we implement our technology and we make immediate savings there. And then on the revenue side, we have a much broader offering into that customer base. The other reason is that we've been able to buy companies, in Europe, the smaller ones were 2.25, 2.5 times revenue. I'm going to say revenue, but believe me, we work the EBITDA with all of these things, and they have to hit that standard too. But at a revenue level, it's about 2.5 times. The larger ones are 3 to 4 times, and the same in the US. And we've got a pipeline of those, but our own market cap at the moment is below what we would be paying for companies in the private sector. So we're going to work hard on the share price this year. Now that we've got a stronger team, I'll be doing a bit more on it. We're expecting good news flow as we go along. So hopefully the world will recover a little bit, the macro economy will recover a little bit, and the news that we'll be sharing will help move that share price up, and then we can go after some of the bigger ones. We have a couple of small ones that we will probably do some work on over the next couple of months. But again, that arbitrage, once you get the scale, if we're buying at 2.5 or 4 times, once we hit the 40 million or 50 million, we're on the 7 to 9 times valuation as an exit valuation. So we want to keep working on that, and we will. Just a couple of things since the year-end. Tealbook was I mentioned that partnerships earlier on. Diane and David joining us. The relaunch of the product has been wonderful. I mean, it's been a revelation what a rebrand can do, and how we stand out now, and how we're viewed by our customers, by the market, and also by our competitors.
Grania, I might just jump in. I think battery life on the phone has probably come to haunt him. Vodafone strike too, but
no problem at all. I can finish off. So just an apologies about that, everybody. Vodafone is certainly striking twice today. Okay, so trading in the financial year has been in line with the board's expectations, which we're very happy with. And obviously the board has the confidence of the continued and sustained demand for the solutions, and obviously the potential for the additional products that we plan to be integrated into the platform. So overall, very, very confident of the outlook ahead for 2022. Moving on then, this is just leading into, and I suppose in one respect, a recap, but also showing the vision of where we are going. All the products that we have really have some, I suppose, some common functionality and common traits in that they offer the analytics, the fraud detection, the anomaly detection, compliance and risk obviously is very, very important for our clients. And then, critically, recovery of working capital, which is often a key leader for us in our sales approach. It makes the sales process quite easy when we can demonstrate that we can actively recover money for the customers, which very much is a differentiator of Glantus apart from some other competitors. And then the next element of our 360 offering is driving value across the supply chain by working with a finance partner to unlock working capital. And this is something that over the coming months we will be releasing in more detail. And it's one of the areas that why Diane has come on board that we will be looking into to expand and offer to our customers. And we think this is going to be a brilliant addition to the Glantus offering as a whole. So the opportunity really ahead of us is to capitalize on our position to drive scale. We've got the customers, we're attracting more customers. We've won obviously new logos this year already. And with all of that, and our own IP. We're not reliant on any third-party software. We're going to leverage this market position to become a 360 fintech provider and introduce that core offering of supply chain financing with a funding partner. Other opportunities are potentially even foreign exchange services. We deal in many currencies on our platform and with our customers in the recovery process. So overall, it is a huge opportunity for us to develop over the coming year. And then finally, to capitalize on in this hyper growth market, accounts payable, is really changing for the better. Companies realize that there is a huge amount of working capital caught up in accounts payable, and they're very much putting these departments under pressure to become a value add department. So these the FCs and the CFOs of these global companies are really looking to this department to add value to the business and drive that cash flow. And that's where Glantus really comes into play. Massive pressures on resources at the moment. So companies realize clearly with COVID as well, they need to be much more agile, much more remote and automated. And all the Glantus products suit all those needs that the customers have. So on the basis of that, we very much feel that we're at the intersection of this and to really capitalize on this high growth market. Finally, then, reasons to invest. We've probably outlined a lot of it over the last hour. We've a very strong team, as Maurice went through earlier. Our product, we feel, is very unique, a combination. We have much more deeper breadth of offering than some of the competitors would have in that sector. They only focus on one or two of the areas, and really the recovery side of it to complement all the software solutions is very much a differentiator for us. Huge market demand, massive growth for us over the last 3-4 years, very good customer loyalty. As I said, long-term relationships with the customer, very low subscription churn, very good acquisition experience. We're very proud of the acquisitions we've done. We feel they've been very strategic. We've thought long and hard about the acquisitions we wanted to get and why we wanted to get them. And we've been very good at delivering integration savings in the first year of each of the acquisitions, strong growth and really spectacular optional value in our fintech opportunity. So following on then from that, I see some questions on the side here. I'll go through some of them.
That's really kind. Let me just jump in just to give you a pause, Grania, because there's quite a few there, as you can see. So yes. I'll let you get the measure of a few of them. And just while Grania does that, thank you to everybody that has submitted questions during this afternoon's event. But ladies and gentlemen, please do continue to submit your questions using the Q&A tab that's just on the right-hand corner of your screen. But just while Grania takes a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with the copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. And Grania, obviously, we haven't got Maurice dialed back in at this particular point, and just to really remind you that any questions here that we don't get through or you'd like a bit more time to give a response to, we'll provide them to you after the meeting's finished, and then we'll put any written responses to any questions thereafter and notify those on the call when that's been done. So if I may just hand back to you, if you could read out any of the questions and give a response where it's appropriate, that'd be great.
No problem. I see a recommendation there to quote the EPS after depreciation and amortization. So in our results, I will do that on the presentation, but in our results that we published, the full EPS, basic and diluted, is in our financial results that we published on Monday. Question about the partnerships: how beneficial is the company in terms of revenue opportunity, Tealbrook? So I think that as Maurice said, we're just embarking on the partnership route. So we think that is.
Ronnie, just to let you know, yes. I'm back on. I actually completed the presentation before I realized that I cut off, so I don't even know when I was cut off.
No problem. Don't worry. I'll just keep going down through some of these questions. are we planning on how are we planning on funding future acquisitions? Well, depending on the size of the acquisitions, will either be with our own resources or with a mixture of debt and equity. But each one of the acquisitions will be deemed on their own merit. At all times, we would have some acquisitions that we are looking at, and they would vary dramatically in size. So we will deal with those in each on their own merit. But at the same time, we do take the approach to debt and equity serious, and we will be making sure that we're fiscally prudent from that respect. Next question, how sustainable is the very low tax rate? We think it is quite sustainable. We have been very, very smart at setting up our IP, making sure that the IP of our acquisitions we brought back to Ireland, so we can avail of the Irish tax rate. Yes, we know that globally tax rates are going up, but Ireland will still continue to enjoy a low tax rate, and we do have R&D tax credits. So we're confident that we will definitely stay in single digits for the near future, for sure. The revenue growth split between organic and acquired growth. So yes, we did have some acquisitions growth during the year, and the organic was probably just under 10%. Very, very strong growth in EMEA. Very proud of that. And also the subscription growth rate was actually at about 23%, the organic subscription growth rate. The final question is about the share price. Yes, I'm sure everybody is aware our share price is, like a lot of other companies, is trading below our IPO rate. We, as Maurice has said, we have delivered on what we have set out to do. We've actively said that we would do acquisitions, which we've done. We've reached our targets. We're starting 2022 off on a good start as well. So we feel that we're doing everything that we should be doing as a company, and we have no doubt that the share price should climb in recognition of that in time. We fully appreciate that current market conditions are really, really tough for everybody, and a lot of companies, even posting significant profits, are still under the previous year's price. Maurice, I don't know if you're still online here, if you want to add in any final thoughts.
No, I mean, I went through, I did a fantastic summary, but clearly I was only talking to myself. No, I guess on the overall scene, I mean, I'm going to go back over some of those questions a little bit in that we as Granny said, we set out to do, we did what we set out to do at the time of the IPO. We've invested our funds wisely. We've developed the products really well. We've grown the pipelines considerably since the rebrand. We've invested in people. We've got good account management teams now working with our existing customers, and we've also grown the leadership team, which is really important for us as we continue to grow. We're expecting strong organic growth. We're expecting strong partnerships to the point of the acquisitions. That's an issue. There's no question. We have a pipeline of them. I keep them, keep the plate spinning on all of those. We'd probably be able to do a couple of smaller ones, but the really chunky ones, you know, we are aligned as a management team with all the investors. We're not going to do anything that will reduce value. So we have to work on our share price and getting that share price up and getting the market cap up so that we can do some of the larger ones, because they'd be quite dilutive at the moment, given the valuations that companies like ours are getting in the States. There's no point whinging about that. We just get the head down. As I said, we're expecting to have good news flow throughout the year, organically, and on the partnerships. And I'm sure Grania covered Diane's move into an executive position around the fintech piece. We're expecting by the end of the summer to be trialing that and to have banking partners, and we're hoping to go live with a customer before the end of the year. So that's really exciting, and the numbers are quite staggering, but we're not issuing any numbers until we get the basics in place around that. So there's a lot of good news flow coming over the next few months. I mean, we're expecting or hoping, or we're dependent a bit, I guess, on the macroeconomic situation improving a little bit. But we have all our ducks in a row. in what we're doing. And I don't think the management team or the board have ever been more confident in the business as we are today, when we can see what's happening with our pipelines, and with the reaction from our customers to the enhanced product suite. So we're in a very good space. We have our ducks in a row. We need a few things to happen on the macro economy, and we're hoping that with the work we do with our PR and with the news flow over the next number of months, that we will get a bit of upward movement in the share price, which will facilitate some larger acquisitions.
That's great. Maurice Granier, thank you very much indeed. And apologies for the disconnection, but glad to have you back on to summarise, Maurice. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be highly valued by the company. On behalf of the management team of Glantus Holdings PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and may I wish you all a very pleasant evening. Thank you.
Thank you.